This man invented this math to get the Apollo mission to the moon, and now we're using it in finance, his calculations. And this is the Kalman filter. So I'm building a strategy around it today. I'm going to show you kind of the results from my preliminary work with. This is from Rudolf Kalman. It's a 1960 paper, which is called A New Approach to Linear Filtering and Prediction Problems. So essentially what he did here, and now it's used in finance, he had to track position, velocity, and acceleration through noisy sensor data, which is just like trading candlesticks data. So we've applied a 3-stage Kalman filter to remove the noise from our price signals on our trading script. So we've applied a 3-stage Kalman filter to our trading script to remove that noise so that we can get the true price signal. So we need our position level, our velocity, and our acceleration to be non-negative as well as volume confirmation. And I'm going to show you exactly how that works today in the video. Before I get into it too deeply though, if you haven't subscribed yet, consider subscribing to the channel and dropping a comment down below. I try to reply to all the comments. And it would really help me out if you felt like clicking the like button as well. Thank you. Before we talk about the Kalman filter specifically, I have a bunch of different strategies here to show you. So I've done a batch overnight, and all of these different strategies here that I'm showing here, flickering on screen, this one has 24% drawdown. These were automatically optimized in my state, in my local trading engine that Claude Code helped me develop. I've showed you guys how to develop something like this before in previous videos if you want to go check that out. And it's really crucial to build something like this that can stress test it and automatically optimize, find the best parameters. It can also randomize the candlesticks as well for robustness testing, which is the #1 thing I've talked about on the channel. Look how good this strategy looks, right? 63% win rate. The Sortino ratio can't even calculate because the results are so good. And if we go down to the bootstrapping, even where the candlesticks got randomized, it's still pretty incredible. There's one hiccup here, but it's still up after that. And then another bootstrapping variation, it's nearly perfect. As well as the out of sample data looks really good too. Now, I want to tell you about, this is called the super smoother, and there's also papers on this as well. I was researching the Apollo financial situation and the Kalman filter, and I came across something called the super smoother. Now, my engine, my Claude was able to build this. I have an engine that runs this, but there is a critical problem here. The drawdown is almost too low. It's only 2.35%. So something's going wrong here. And so when I actually looked into it, I had an oopsie. My Claude actually built something that had look-ahead bias. Now, we've seen these in TradingView strategies as well, especially with TradingView version 1 and version 2. They kind of had, you had full realm over what you could develop as far as the math goes. So you could plug in logic that looked ahead. It looked at future candlesticks that shouldn't really have access to in your strategy at the time of the calculation. This could mean looking at an average of candles, but some of the candles as sampling haven't appeared yet on the chart. And so in real time, you're going to have something called repainting, which means the strategy does not work in real time at all. So in Python, you have to safeguard yourself around that as well by knowing certain features not to use. So you have to make sure that you have hard rules and that you're filtering. So if you're letting your Claude code run overnight, like I have, I run my engine overnight, Claude built strategies and then runs them and tests them over and over again overnight. Well, you have to make sure that it is banned from using any kind of look-ahead bias. So when I ran this exact same strategy, again, I'll show you the results when I removed the look-ahead bias. And a lot of people get attached to strategies that seem like they do really good or scalp really well. Maybe they're only open for one candle and they close perfectly. Somehow they know every time where that the price is headed, and that's because of look-ahead bias. So you want to remove that from your script. So what do we do when we adjust it so it can't look at the look-ahead candles? Well, are the results this good with 2% drawdown? No, look at the results. It's a negative strategy. So this was the best result that the strategy was able to produce, and it was obviously negative. Even in the out of sample data, it starts to look good towards the end here, but has a huge period of drawdown in the very beginning. So you know that it's not any good. So what about strategies that don't have look ahead bias? I have a couple here, 30% drawdown, 32%, Sharpe ratio 0.8 is pretty good. Sharpe ratio 0.7. So we're getting there. And this one is really interesting as well. 24% drawdown, 0.7 Sharpe ratio. And, you know, the thing you have to look at, we want to look at the out of sample data. This is the data that Claude still had access to. So it was still producing good results. And, you know, the drawdown came up there a little bit. But if we really go to the out of sample, this is where we decide whether we want to use it or not. And yeah, no, we don't. 79% drawdown is too high, and the Sharpe ratio came down to like basically 0. So this strategy is something that through our rigorous testing, you would not be able to tell if this is good or bad if you were just using a single backtest in TradingView, but you would be able to tell if it's good or bad by doing in-sample, out-of-sample testing like I've shown you. And the 3 stages that I have are the training. This is where Claude and my strategy engine has access to. So it tunes the parameters for this. And if it passes the Sharpe and drawdown, then it passes it. And then using those same parameters, you just test it on new data. So this is one set of data that Claude was looking at as preliminary out of sample data. And it said, okay, it's still not too bad. And then what I tell Claude to do is never to access some of the data. So there's the 3rd criteria. And it cannot access this out of sample data, which is really handy when you want to verify the work that Claude did. Another thing you could do is you could try to tune it on a different coin, a different stock, or a different equity to see if it still is configurable and generalizable, because you want it to remain flexible. So we have this other one here, 32% drawdown, and the Sharpe is 0.8. I'm just going to quickly show you guys the testing data. This was the out of sample data that Claude had access to, the second test, and the Sharpe came up, the drawdown came up, and the Sharpe came down a little bit. So the final chapter of this is looking at the auto sample and obviously the Monte Carlo simulations. And the auto sample is not too bad, right? 0.5 Sharpe. And this might be something that we can work with. We can add a couple chop filters so it will turn off when the trade conditions are unfavorable, when the market conditions aren't trending enough. We can do that. And we can also add some trade exits and potentially start building off this strategy. This last one here, I'm just going to quickly show jumping right to the out of sample data. And yes, we have some distortion, and what distortion is the Sharpe ratio went from 0.7-ish to 0.48, meaning the Sharpe came down and then the max drawdown would come up. So what that means is over time, yeah, it still is performing and it still might be robust because you're never going to have the same Sharpe ratio in out of sample as you do in sample. It's always usually going to be lower, but you have to remember that you want to minimize that ratio. So it's still something that's workable. So these are configurations that could potentially work. We'd have to put them through more Monte Carlo simulations as well. But let's jump into our Kalman indicator here, this one. So this is the Kalman indicator, and I tried my best. There might be some other variations of the Kalman, and this is just one version. So tonight, what I'm going to do, this one didn't look like it turned out so well. We can jump right to the full out of sample data. The Sharpe ratio dropped from 0.48 to 0.35. Now, that is still not the best, right? We want that to come up higher, of course. And the number one thing I'm going to do is tell Claude to take, this is our baseline. We're going to make variations, meaning we can add more logic into it and we can add more trading rules. So with each of these, you can test 8 or 9 different trading rules using the same math. So it means, let's say you had a simple EMA, right? And maybe you want to trade when the price is above the EMA. Maybe you want the EMA to be sloping up. Maybe you want it to be both of those things, right? So you could do combinations of those until you actually find a robust configuration for both the math and for the parameters and for those trading rules that you have. So that's another way. You basically want to brute force as many different options as you can think of, essentially. And what you can also do is you can research papers as well. These are key math problems. The Kalman filter as well. This is we also have state space models, and yep, Kalman filtering and smoothing as well. So these are how you remove noise from your price signals. So its computational cost is super efficient. It was even used in the Apollo program by NASA in the 1960s, which is super remarkable that we can use this in finance as well to smooth out, the noise and get the true signal, the true price. So your trading bot hopefully will have a better win rate, better chance of success that way. So I really wanted to talk about just the curve fitting as well. That's why we do all kinds of back tests, robustness tests, randomizing candlesticks, breaking up price patterns, but also there is look ahead bias that you have to watch out for as well, which is in TradingView, most people call that repainting, but this is a trap as well. So when you're building these strategies, it's not foolproof. You really have to watch what is happening and understand your code. Just because it looks like it works here does not mean it 100% will work in real time. So that's why there is a rigorous process, and it is grueling to build. But when you actually do it, like me, you're able to have hopefully some success. That's all for this video. I'm probably going to be doing more content about OpenClaw in the future, showing you guys how to set all of that up. So if you want to see that content and see some of these strategies in real time, hit the subscribe button to follow along on the journey as well. And I hope that you guys have some success building your own strategies. As always, there's a ton of really good strategies. People are building strategies in the Trade Tactics Discord. There's some new ones coming along. You can come check them out in the free Discord server. The link is down in the description below. And if you want to see where I'm putting my strategies up, I'm tuning them and I'm putting them on Signal Swap. We have a full backtester. So if you want to backtest your strategies, you can drag and drop your Pine script directly in and it will optimize it for you, just like I'm showing you here in all of these simulations. It'll do a similar process for that directly in Pine script though. So you don't have to know how to code Python, or you don't have to code your own advanced system if you don't get involved with that. You can just head over to signalswap.io, sign up for an account, and start backtesting. Right now, system is down, but it'll be up very shortly. So we're in the alpha testing mode. You could also connect trading bots so you can trade live as well. So that's where I'm trading live. It's free to join, free to trade live. Connect your signals from TradingView for free up to the service and it'll connect. And you also get to see how fast it executes, right? TradingView webhook all the way to the exchange. I hope to see you on signalswap.io and I'll see you in the next video.